channel. Learning with JWCPA, your go-to source for all things personal and business finance and tax related. I am an active CPA working as a financial and tax consultant to support small business owners and individual taxpayers to achieve their financial goals. I provide numerous services to my client, such as tax preparation, tax planning, financial consulting, payroll services, and bookkeeping services. In addition, I also teach accounting-related courses to graduate students at a local private university. I love teaching and sharing what I know. That is why I created these videos to help you gather some basic knowledge about taxes. In this video, we'll dive into the world of tax deductions and explore key differences between standard deductions and itemized deductions. By the end of the video, you will learn 3 things about these deductions. Let's get started. What are these deductions? The standard deduction is fixed dollar amount set by the government, which varies depending on your filing status. It is a simplified way to reduce your taxable income, and you don't need to provide detailed record of your expenses to claim it. Itemized deductions are specific expenses that you can deduct from your taxable income, such as mortgage expenses, mortgage interest paid on your home, property tax paid on your home, and the medical expenses and state and local taxes. To claim itemized deduction, you must keep detailed records. The first thing you need to know about standard deduction and itemized deduction is that you have a choice between standard deductions and itemized deduction. But which one should you choose? You want to pay as little tax as legally possible. So here is what you need to do. Choose the one that gives you the higher deductions. According to the Tax Policy Center, 90% of households in the United States will take standard deductions rather itemizing their deductions. For the year 2023, if taxpayer file married filing jointly status, they will have 27,700 deductions. If they file as a single status, they will have $13,850 deduction. If they file head of household status, they will have 20,800 deductions. So in the end, standard deductions will directly reduce your taxable income. Now let's talk about the second thing you need to know, simplicity versus detailed record keeping. The standard deduction is like express lane at the grocery store. It's quick and easy. You don't need to provide detailed records of your expenses. This option simplifies the tax filing process. It is often the preferred choice for individuals with straightforward financial situations. On the other hand, itemized deductions require you to keep full records and document specific expenses like mortgage interest, property taxes, medical expenses, and charitable donations. This can be time consuming, but it might be worth it if your eligible deduction add up to more than the standard deduction. Between these 2 types of deductions, choose the one that gives you the higher deduction. The third thing we need to understand is the eligibility criteria and the threshold associated with itemized deductions. To itemize deduction, you must meet specifically eligibility criteria, and your total eligible deductions must exceed standard deductions for your filing status. Additionally, certain deductions, like medical expenses, have specific thresholds. Medical expenses must exceed a certain percentage of your adjusted gross income, AGI, in order to be deductible. So there you have it, 3 essential things you need to know about standard deductions versus itemized deductions. When it comes to taxes, knowledge is power. Choosing the right deduction method can save you money and simplify your tax filing experience. If you have any questions or topics you'd like me to cover, please leave them in the comments below. See you in the next video. Enjoy learning!